The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Money Masters and Treasure Hunters, welcome to the June 26th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that empower human potential, because living up to our potential, folks, that is something that we must master each and every day. So let's begin with 4 empowering thoughts brought to us by 3 folks and myself out here. The first one by William Feather goes like this: the happiest people are those that are too busy to notice that they are not. Think about that one. That's a good thought. How about this one from Arthur Rubinstein? He says, I must accept life unconditionally. Most people ask for happiness on condition. Something to think about. Happiness, he didn't say that, I said that. Happiness can only be felt if you don't set any condition. That's another great way to approach happiness, folks. And how about this one from Albert Hubbard? He says, the happiness of this life depends less on what befalls you than the way in which you take it. That is a way to live. And then, folks, I say the key to happiness, well, it's simply this. Cheerfulness, think about this. Cheerfulness will open the door when the other keys fail. Let's go check out the markets. Let's check out the happiness in the markets for the bulls right now. We've got the Dow up 117 points, trading at 14,877. S&P 500 trading out at about 1,600 even, up 12.5 points. The Russell 2000, that's up about 5 points, trading at 967. NASDAQ Composite up 25 at 3373. NASDAQ 100 up 22 points, trading at 2888. New York Stock Exchange up 0.7%. They're all really up about 0.7%. This morning, with the exception of the Russell, just lagging a tad. New York Stock Exchange up 69 points. Of course, to the downside here, $37 off of the close yesterday is gold, trading at $12.37 on its way to $11.50. We'll go explore gold. We'll be gold explorers here today. You've got silver's down 72 pennies. We looked at that during the first hour. That's headed to at least the 17 and 30, 40, 50-ish cent range out there. Could be lower if that area fails. You've got light sweet crude is flat, trading between flat and up a penny out here. So with the moving King dollar, which right now is up about 16 ticks out here, light sweet crude is most certainly holding its own. Our call number is 877-927-6648. You can give us a call. We can take a look at your stock chart, anything that you would like to. Currently over in Europe right now, the DAX is trading up 130 points, and the FTSE up 64. Let's start off by taking a look here at, I didn't mean to do that there. Almost closed down my data feed. Ooh, don't want to do that. That'll make looking at the markets more difficult. Let's start off by taking a look at the S&P 500. The S&P 500, we're taking a look at really 3 beautiful patterns that it has set up here. One of them I don't have colored in. The first pattern, we've got the 0.618 Gartley buy pattern. That's the one that formed the low coming into the trend line on June 6th. And the trend line that I'm referring to is coming off of that November 16th low. If you just use the November 16th low as your touch point, then the very next touch point would be your December 31st area. What we can see in that trend line, I think, is important for us to really be paying attention to. Not just because it was broken, but because as we take a look at this bounce ensue in the marketplace, we need to be respectful of when you break a trend line, when you break a channel line, price oftentimes will go back and it will test that area. So that is one possibility that we have to be watching for out here as we go now dive down a little bit further into the S&P 500 index out here. So I'm going to really explode this up, make it a little bit easier for you to follow along on Tiger TV. So we can see here also what did the S&P do? It completed a 1-to-1 A to B equals CD down. Your A point was your high from May 22nd, that key reversal session. Your B point was coming down into that trend line. That was the June 6th low out there. That level is 1598. And then your C point was the bounce where it set up another Gartley sell pattern, the 0.618 Gartley sell pattern, and that was on the trading session of June 18th, last Tuesday. Not yesterday, but last Tuesday, as price made it up into the 1654 level. That set up your C point of an A to B equals CD down. That's what was completed coming into Monday's session. Monday's session inside the S&P 500 did not make it all the way down to the April 18th level. What it did do was it did a 0.786 retracement. It went down to that next floor. And when you're taking a look at retracement between major swing points, you're looking at the 618 level, you're looking at the 0.382, and you're looking at the 0.786. Now, price pushed down just a tad below that. It closed just above the 0.786. That really is what qualifies as a 0.786 retracement. So that was to the downside. Now, the normal retracement of any index, any Gartley, of any A to B equals CD pattern out here, really two of them that you're going to take a look at. You're going to take a look at the ultimate one, which is going from the A point to the D point of an A to B equals CD down. That means May 22nd's high all the way down to Monday's low out here. Inside the S&P 500, the dead cat bounce is the 0.382. That's your first retracement level. That'll take you up into about 1608, 1609 range. Now, this is going to be very key for us to be watching, because if we see a reversal, the reversal start, we're going to see another reversal start. The key question is when. That's what we're all trying to do, is we're looking for clues as to when that is going to take place out here, because we have not seen market lows. We're just waiting on this bounce to finish out here. And now the question is, where is it that we're going to plant our sails? Well, one of those first areas that we need to be looking at is in that 1608 range, because that is your dead cat bounce. If that is the only retracement that is done, we're looking for one big, this is not a Nike swoosh, this is going to be a market swoosh to the downside, because this is setting up the C point of a, you could take a look at either a smaller or larger. Either one. We'll take the most conservative one here, and the most conservative next A to B equals CD is going to be coming off of the swing point from last Tuesday, from that high before we saw that waterfall cascade. That would be your conservative one, which is what, about an 80 or 90 point move. We went from 1654 down to a low of 1560. So yeah, you're looking at you're looking at a good 40 or 80 point move out there. And if it's only a 0.382 retracement that this does out here in the marketplace, it says that it will do more than a 1-to-1 A to B equals CD down. So that's what we're paying attention to. That's the first area. You can see here the blue squiggly line on my screen. That happens to be the 9-day exponential moving average. That is being tested here this morning. The 9-day is 1604. Price has gotten up to 1603.58. So that could be another area of resistance inside this market out here. Where would be the next area? The next area, as we take a look at this, could be just simply making a move all the way up to where we see this wide-ranging bar, a little bit of a gap down as well, which was June 20th. And the high there is 1624. Now, when we take a look at that level, what you will also notice is that would also be a test of the trend line that it broke. So we cannot rule out a move to the 1624 level. That would be another 14 points on top of this. I don't think that because of the EKG, because of the 30-minute chart that we're looking at, that it's got enough energy to make one straight line move up there. But we need to be paying attention. We need to pay careful attention, because when you do break a trend line, oftentimes what happens is a market, whatever it is you're trading, will go back and it will test that. In fact, yesterday during the show, we were taking a look at the Euro-Japanese yen, the 30-minute chart out there. For those of you who remember, we were taking a look at sideways moves, consolidation moves, and just how cool they are, because when you break out of a consolidation move, it tells you what your projected next area is that it will rise or it will fall to. And we're going to go take a look at the Euro-Japanese yen. I remember we did that yesterday, and we're going to go see what in fact unfolded there. Now, we took a look at the A to D move. You also need to take a look at the move of coming off of the C to D leg. That would be coming off of last Tuesday's high, about 1654, down to the low that was put in on Monday. And what you'll see here is right at about 1618 or so. That is what measures the 0.618 retracement of that leg. So that says says, hey, if you can make it to 1618, you certainly can make it to the top of that rising trend line out there as your test inside the marketplace. So we're in that range. The range right now for a reversal is in between today and those price levels out there. So we really have to be keeping our eyes glued to the monitors, looking for those reversal signals in the market. It probably is going to be the U.S. that leads with regard to which direction the markets are going to move into. But we're right in that range. We're right in that sweet spot. The sweet spot, unfortunately, is a fairly large range, and that was set up because we've had large moves to the downside out here. So it's sometime between right now, I'll say, and coming into any of these price levels on the S&P 500, 1618, 1610, maybe 1624 at the top of that range out there. So that's on our S&P 500. Let's go take a look at the SPYs, try to make it a little bit easier for you on the SPY out here. Let's go see what it was doing. And the SPYs here, so just to kind of correlate everything for us, as we go take a look at the SPY, we're going to take a look at the SPY, and let me clean this up because I can always add these patterns. This here says to us that where the SPY is eventually headed to at a minimum. And what's nice is that now if you're in long positions out here, by all means, please now get some stops in place, because if you're still in long positions, from a daily standpoint, it means you didn't have any stop in place as the market cascaded down. So consider this to be a gift of the marketplace and go ahead and get some stops in place, because the SPY is headed to 147.17 at a minimum. And you're trading out right now on the SPY at, well, it's easier for me to actually come down here and take a look at it. Let me give you the exact number. The SPY's trade at 159.60. So that's a heck of a move. 159.60 if this were the high to 147.17. Now, what the SPYs were doing, so let's go back here. What the SPYs were doing, two trading sessions ago on Monday, you had volume to the downside. You had 222 million shares moving into the swing point down here with 167 million shares from April the 18th. So price will be back to the downside. Yesterday's bounce in the market was 162. 162 going against 222, as well as going against the downdraft of 321 million shares from June the 20th out here. So we took a look at that C to D leg. That was one of our retracement levels. Inside the SPYs, the C to D leg would take you to 162.07. Well, 162.07 actually takes you all the way up to the top of the downdraft from June 20th. That number is actually 162.10. So our reversal is somewhere between right around where we're at right now to that 162.07 level. That's what I would be looking at for our first reversal sign. If we go take a look at that A to D point on the A to B equals CD down that was completed out here, you can see that the 0.382 level is where we're at right now. Well, it's just slightly higher than where we're at right now. It's actually looks like about 160.83. And, you know, that may be it. That may be as far as it's going to go. The 0.618 retracement of that A to D move, that'd be a heck of a move. That would take you all the way back to the bottom of the gap that was created on June the 19th, that low about 163.38. That'd be a heck of a move. I don't know that that is what we are going to see inside the marketplace. So far today, volume-wise, 33 million shares to the upside in the first 45 minutes of trading, so not too bad out there. We'll take a look at the 30-minute chart of the ES Mini, try to get a feel for any bearish candles that might be on the horizon. Right now, we've got the Dow is it's up. I can't get to my panel out here. When we get back, we'll go see where these markets are at. We'll be right back, folks.
The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is up 119 right now. S&P is up 12. Let's go out to Plymouth, Massachusetts, to Tom. Tom, thanks for calling. Thanks for holding. How are you doing this morning?
Good morning, Steve. How are you?
Excellent, excellent. Thanks for calling. You're inside the. Are you inside the TNA right now? Are you long? The small caps?
I am around 4306. I think I got in there last week.
Okay.
I don't want to be too greedy, but I'm looking for like 47 maybe, and then get out of town.
So if we take a look at the TNA, we're going to start off by taking a look at. Let's go take a look at the IWM. Do you focus on the IWM first for making your trading decisions on TNA or TZA?
Yes.
Okay, great. So that's great. That's what you should do, because that's really your underlying instrument out here. So let's take a look at the IWM. Now, the IWM itself had formed a nice 0.618 Gartley buy pattern. And folks, if you haven't had a chance to check out the art of timing the trade charts, Tom and David are going to be doing a workshop on Thursday. So tomorrow evening from 6:30 to 7:30. There's all kinds of great material on our homepage of TFNN.com. You would have seen this probably a ton Tom, he saw this Gartley pattern out here that formed on Monday as it made a 0.618 retracement out here as it got down to a low of 93.83. And congratulations, by the way, Tom. If you were going to play a long position in the market, I would say that the small caps, the IWM, was the place to go ahead and do it. And the reason that I say that, folks, if we go take a look at the other ETFs out here, we're not going to do it at the moment, but they're all back into the June low out here, the April 18th type low. In this case here, the small caps have only made a 0.618 retracement of that area. So you were in the right spot. Now, I do not like the way that the IWM is trading here today because it's been a pop and drop. It popped right up into that 9-period exponential moving average, and it's been moving lower ever since out here. But it is still just sitting at the 0.382 area, and it says that if these markets do move higher, what you could be looking at, Tom, is the small caps may be moving up to 97.52 out there. But at a minimum, I would put your stop so that you have a risk-free trade at your entry price. Because it should not, if this market is going to bounce any higher, that entry price should be safe out there. So at a minimum, at least do that, okay? The second thing, when I hear somebody say, I don't want to be too greedy, and that's a beautiful thing, there is never, ever, ever, I think I said ever, anything wrong with ever taking a profit. So what you could also do here is you could take half of your profit and then go ahead and leave the stop for the other half at yesterday's low. There would be nothing wrong in doing that because we're going to see some type of market reversal between now and Friday, at least, where we see that bounce takes us to. It could be 2.5 hours from now, 3 hours from now when it comes in. The time frame, I'm not sure of it. I think the market's going to continue to drift higher on lighter volume, but that reversal the sellers are going to come back in at some point in time, and they're going to want to take advantage of folks that aren't like you and are too greedy out there. So, if we take a look at TNA specifically, if I go over to the index itself on TNA, we'll take a look at try to take a look at an intraday chart, a 30-minute chart. Now, are you around your computer screen much to be able to track this?
Well, I will be tomorrow, but not today.
Okay. So what it's doing here today, it's really coming in on the 30-minute chart to the 10 o'clock open on June 20th. And that level was, the high was $47. It did 2.6 million shares. And as it's getting up here on the 30-minute chart, the open this morning, it did it on 1.8 million shares. So on the 30-minute chart, it doesn't have enough volume to take out that downdraft. That is why it is struggling out here. Or it looks like one of the reasons that it's struggling. Let's go down to a 10-minute chart out here. The 10-minute chart right at that same level at the open on June 20th did 1.1 million shares. And today the TNA at the open, and it sold off since the open, did only 650,000 shares. So it's light. Now, as it's coming back here, it's coming back into this swing point from the close yesterday. And, Tom, that price level is $45 even. That's the low. And the high is 45.22, and it's got 1 million shares. So if we take a look at this is a 10-minute chart, it was coming back with only 425,000 shares. So it's coming back with some light volume here, and that's why I think what you can do is you can either put a stop at the close and at your entry point on here, and then you've got a risk-free trade. Take half of your profit. And then also the other half have it as a risk-free trade out there, so you don't eat up any of your losses. And then as far as where this can move to, what was the price point that you had? You were shooting for about 47?
Yeah, if it got anywhere near 47, I'm getting out.
Okay.
So.
All right, that'd be great because you'll be inside the gap. If it can get to 47, it actually could get up to about 49. All right, Tom?
Well, thank you, sir.
You bet. Thanks so much for calling. 877-927-6648. Dow is up 105 right now, and we'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, we had Tom call us from Plymouth, and he had a target of $47. Some of you may have been saying, well, how did Tom come up with that $47 number? No, I didn't ask him, but we can just simply go take a look at the charts, and we can figure that out. He was coming up with the $47 area, or he should have been coming up with the $47 area. One of the reasons was just simply by going to the swing point high. I'm on a 30-minute chart out here at 3 o'clock in the afternoon on June the 18th. That level in the TNA was $51.34, all the way down to the low that was put in here at 12:30 in the afternoon on June 24th out there. That low was $42.57. The sweet 618 level is $47.99. So that is one of the reasons. Now, at this stage here, we've been watching the IWM. It has been weak, which is interesting to see in the marketplace, because what we talked about, or what I spoke about when we took a look at the Russell 2000, the IWM, it has had the least from a pullback standpoint of all of the four major ETF indexes that we follow out here. Now, on our 30-minute chart, you can see a blue line and a red line on my screen if you're following along on Tiger TV. The blue line represents the 9-period exponential moving average, and the red line is the 18. It's a nice little tool from a trending standpoint. Again, it's a lagging indicator out here, but it's a nice little tool to help you stay into a trade maybe a little bit longer than you ordinarily wouldn't have. And what you want to see here, the bullish side is when the 9 is above the 18. When the 9 is below the 18, that's when you want to make sure you say, you know what, I'm going to go ahead, I'm going to put my money in safekeeping out here. And it depends on now, what you want to do is you want to make sure that whatever time frame it is you're trading on, that is really what you're paying attention to, are the signals on that chart. You want to know what's up above you, because of all the knocking that you can hear, and as well as you want to understand what is down below. So you want to understand those, but trade the chart time frame that you are on out here. If I just pull this chart back on TNA, and if you just use that simple tool, the simple tool being an exponential versus a simple moving average, 9 and 18 day out here, you can see that it's a great way to be able to give you guidance as to where the next move is likely to be and when you should be in and when you should be out. Now, you can use, and you should use, leading indicators such as A to B equals CD patterns or Gartley or expansion, butterfly patterns out there, and you should use those also as entry signals. So those are going to be early entry signals along with some candlesticks. But then what you're waiting for is you're waiting to see that little crossover to prove to you that you're on the right side of the trade. And at the moment, inside the TNA, on the 30-minute chart, it shows that you are on the right side of the trade. Of course, if we go over to the ETF, and here's where it gets a little bit tricky in playing these counter-trend rallies, the trend is your friend, and if you take a look at the 9-day, 18-day, that's what I've also got on the daily chart here. This is for the IWM. You can see that the 9-day is actually acting as the resistance level. We had a crossover. This was back on last week on Wednesday or Thursday out here, June 21st, when we had the actual crossover. And if you take a look at this here, we just come in. I just take a look at how, this went positive when they had the 9-day cross the 18 back in the April 29, 2013 time frame, and it remained above that area even through a couple of downdrafts, the first downdraft out here, even off of the May 22nd level, and then the market just simply consolidated and moved sideways. So use this as an additional tool. Let's go to our man Mark in Concord, Mass. Mark, thanks for calling. Thanks for holding. How are you doing this morning?
I'm fine, Steve. How are you?
Excellent, and thanks for sending me the email with your book. And I saw there was about 278 pages, so I knew that it wasn't a short story.
Well, it depends how you format it. So
okay.
You can put it into Microsoft Office and format it any way your little heart desires.
All right. Well, I'm gonna do some reading. As I said, with the Stanley Cup over, there's no more sports on television, is there? I guess baseball, right?
Got baseball, and not too long you'll be talking football. So
okay, all right, yeah, and college football too.
Well, you always got water skiing down in your area, I guess.
That's true. You wanted to take a look at oil, light sweet crude?
I want to look at two things. Quickly, I want to look over oil. What's your take on oil?
Well, it hasn't proven itself to me one way or the other. I would say that when you consider how the commodities have been getting whacked here, oil has actually held up pretty well. Now, what oil is doing, and what I'm referring to here, is more of the longer-term trend, which is the weekly chart that I've got up on my screen. And it shows that oil is up against the descending price channel. It broke out. It came back in just slightly. Right now, it's just toying with the top of it. So I don't have a very clear read on it, other than to say that we've seen some weakness in the Queen in the euro, and we've seen some strength in the U.S. dollar, and we've seen gold get hit down $37 right now, and light sweet crudes, it's now participating. It's off $1, but this says to me that it's up against some significant resistance, but it still just won't totally back off.
It just seems like it's just sitting in the $95 area. It just does not want to go 95. 96 just sits there.
Yeah, so we're seeing some movement this morning, but on the longer term chart, just simply going up from the daily to the weekly, it just really has not completely given it up. You'd like to see it. It gave it up last week. He gave you a nice bearish reversal candle, but I expected to see more of a pullback than where we're at right now. It's really kind of been trading sideways ever since the close on Friday.
Okay, next question I have for you. It looks like we made a top out for the trading session so far. 3 minutes into the session, I'm looking at the S&P 500.
Yeah.
At 1603 point something rather. yesterday on Tom's show, he thought that we would get up to 1610 or maybe 1600 or 1600, 1610. My question is, could that top that came in at 9:33 this morning be the high, and we're just going to drift lower, and the top is in?
Could be. I don't think it is, but it could be. I think it would be more likely. So if we take a look at the top that came in, and I'm going to switch over, instead of taking a look at the S&P 500 index, I'm going to look at the actual contract for the ES Mini. And what that was doing is at about, what time was it? About 6 o'clock this morning, it had moved into overbought territory. It continued to drift higher, but it needed to work its way off. And I think that's in essence what we're seeing here. You know, the 9:30 to 10 o'clock session, when the market opens, you expect with the futures being up, I expected to see it continue to try to push higher. I think that the earliest that we would see a reversal in the marketplace, let's see, 10, that'd be 11, 12, would be about 12:30 or 1 o'clock in the afternoon, and that would require a move to at least in the ES Mini that would about 1599.75, so 1600 or so, before there's a pattern that I'm looking for that could fulfill itself. But if it doesn't, then it says that price moves up to about 1602. It doesn't have to stop, by the way, at 1597. It just needs to, 1598. It just needs to hit that at a minimum. So I don't think that, even though it could be, I don't think that the top is. I think the behavior of the marketplace is just naturally working off the overbought condition. And that's why I like to go down into the intraday chart, the 30-minute chart. The only real bearish candle that we've seen here inside the ES Mini was the last candle mark that came in at 10:30, just about the time that you were calling. That was a bearish engulfing bear sash type candle. Now, I will answer the question also this way. If this was the high of the day, and you get a close, you get price that moves below 1583.75, then the answer to your question is you pick the top, not me. Okay, but I think we see the market still move a bit higher out here. It's just working off that that bloated feeling of ordering dessert when you shouldn't have.
Well, okay, my friend, thank you. Hey, just remember that you're gonna really enjoy that book.
Oh, good.
Hey, just remember, I proofed it, but it has not been proofed by a professional proofreader yet. So,
well, no problem.
I'll find a typo or two in there.
Oh, that's. Hey, look, I won't point them out to you because I probably just bypass them. But thanks so much for sending it to me. I do really appreciate that.
Yeah, and shoot me an email back when you.
I will.
When you finish it. Okay, Steve. Talk to you soon.
All right.
Take care, buddy.
Thanks a lot, Mark. Let's go over to gold here. Let's go to Goldilocks. Let's go see what is going on inside there. So we're getting some more strength in the dollar. It's because we're seeing the weakness inside the euro out here. That's off about 83 ticks right now. But let's go take a look at gold. You know, I always look at the continuous contract, and right now it's trading out at about 1237 out here. It's traded into the December 3rd swing point from 2009, the top of it. But let's actually go take a look at the GLD. And let's put the GLD, see if I can find it here on my screen. If not, we'll go ahead and add it. Yeah, I've got the GLD. And let's go ahead and take a look at this on a longer-term time frame. So I'm going to put this on let's see if I put this on a weekly. There we go. So we've got it on a weekly chart. Now, when we take a look at the swing point, the reason why we're using that December swing point, in this case here, December 4th, 2009, is because you've got the high volume bar up there. That high volume bar, when I say high volume, on the weekly chart, this did 183 million shares. So I don't have today's volume here really accumulated in here, but so far you've done 29 million shares. So you're coming into that swing point with some lighter volume. Now the top of the swing point in the GLD is a price level of 119.54, but you're coming in and you're trading right now at 119.78, but you've been down as low as 119.25. So if this travels into and closes below 119.54, it's one way to take a look at it. I really think you need to go over to the actual gold contract to be making your decisions. But in this case here, if it closes inside 119.54, again, it's a weekly chart. So it's not the close today. It would be the close by the end of Friday. Then that sets up a move at least to go test the low of that area, 112.41. What it's also got right down a little bit lower, right around 113, is your 0.618 retracement. Now, this is on the GLD, so it's going to be a different retracement level than we would see on gold, the continuous contract as well. But a break of 113 sends gold down to $93. Now, the key here, or one of the keys to happiness. Certainly, happiness in this case is taking a look at what's going on inside the currency market. So it's coming to the swing point right now on the weekly basis with some light volume. That's the good news. The bad news is the currency pair. We can see here that the euro continuing to move lower, doing it with conviction, getting down to the 0.618 level, which is 130. You're trading really at about that level right now. But just simply that conviction, that way that it's come off of that C point of an A to B equals CD down, says the euro not just wanting to seek the 1.29 level, but it looks like the euro wants to do that full completion of a Gartley sell pattern. That's a light blue pattern that you see on my screen here. That completion is where the C point turned into an A to B equals CD down. Now, interestingly enough, that A to B equals CD down, the 1-to-1, turns out to be a 0.786 Gartley buy pattern right in the 124 level. Now, the cool thing is, and here's a set of leading indicators. It's why, folks, if you haven't had a chance to check out the art of the chart, software, you want to make sure that you go ahead and you sign up. In fact, it's on your homepage at TFNN. So if you are a TFNN subscriber, Tom and the gang were kind enough to go ahead and put a link on your webpage. So all you actually have to do now is just simply join in tomorrow at 6:30. And the great thing about that is that it screens for all of these Gartley and butterfly patterns out there. So it is a incredible time saver. And I know that time is one of your most valuable resources out there. And so go ahead and check that out. Now, Gartley patterns are leading indicators. So in this case here inside the euro, ahead of time, I'm able to draw what is the likely outcome out here. And the reason why we want to be taking a look at that is just simply because of the 58% weighting structure of the euro inside the U.S. dollar index. And so if the euro is going to be moving higher, if the U.S. dollar index is going to be moving higher out there, I don't remember what I just said, but if the euro is moving lower, the dollar is moving higher, that should continue to put pressure on the commodities, even such as light sweet crude, as Mark was first asking about, from Concord. But certainly we're seeing the move inside the inside gold and inside silver out there. And so I think even though we're coming back into a swing point with light volume, that's actually a good thing in that it will set up a nice buy. But I don't think that we're done seeing the price move in gold. I think we're going into that 1155-ish range. And if we put up the longer-term chart of the actual continuous contract of gold, I'll go back to the gold contract, and we'll take a look at the weekly chart here. That's the GLD. I got that. I want to go take a look at the continuous contract. I think I've got the monthly chart. So we take a look at the monthly chart here in gold, right at 1158-ish or so, 1155-ish is the 0.618 retracement level. The problem is with this is when you take a look at these wide-ranging bars. See, whenever you come into a pattern completion, doesn't matter to me. It doesn't matter what different oscillators you might use, what Bollinger Bands, AB equals CD, Chapman Wave. I don't care what technique it is that you're using. The market is always revealing information to you when you take a look at both the volume as well as the bar itself. And when you start coming into those areas, those completion points with wide-ranging bars, that says, look out above or below. It says the momentum is very, very strong. Markets do not end on wide-ranging bars. You put that one in your cap, because that will be a nice feather. Markets do not end on wide-ranging bars. You will not see, not very often, will you see some type of reversal on a wide-ranging bar. This is the monthly chart here, which has more priority than a weekly and then a daily. And guess what? We're coming down into that area with wide-ranging bars, maybe less than 1155 on the track here for gold. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% advantage plus. The plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You know that commercial, the trend is your friend out here. There's another friend, and it is Mastering Probability. It is my newsletter service now. Because in the past, I have never, we've never put out that newsletter service where you've been able to try it for free for 2 weeks. It always has come with an unconditional, and it still does, unconditional 30-day money-back guarantee. You've always had to put a deposit down in order to be able to get access to the first 30 days. You get your money back if you didn't like it for whatever the reason was behind that. But you still had to put down a deposit. And the interesting thing here is a little bit of a backdoor. You know, there's always a backdoor. So if you have tried my newsletter service in the past, and normally when we do these free trials, if you've tried it, you don't get to keep trying it and trying it. But because I've never done a free trial, guess what? I've never done a free trial. So even if you had subscribed to it in the past and you wanted to go ahead and check it out for the next 2 weeks, absolutely free, guess what? There's a back door, and you can do that. So even if you had been a subscriber, you're still eligible to go try that, to go try my newsletter service, Mastering Probability, for 2 weeks, absolutely free. You know all the kinds of education that is in there. So no reason to not go over to the homepage at TFNN.com and sign up for it today. We were talking and taking a look at gold here, and at 1150-ish level is where you've got the next Gartley buy pattern, the 0.618 retracement level. But if gold continues the rest of this month to move down with a wide-ranging bar, that says you've got to be careful. It actually says that we could see gold move into about the 950 level, 946. So the first resting point should be 1155, but it always gets dangerous when you come down into any completion of any pattern with a wide-ranging bar, and that is exactly what it is that we have going on here right now inside of gold. That means also, if we take a look at the equities out here, as we take a look at the gold equities, I think I've got the XAU up on my screen, the weekly chart. I'll go ahead and pull that over here, and the XAU, this had formed a potential 0.786 Gartley buy pattern. You know that we were not going to go ahead and take this trade because as it was completing that pattern, it was doing it on the weekly chart, that April 19th bar. When you trade inside the body of a bar and you are unable to get out of it, what it really says is that your break is going to whichever direction. It's important because your break can be a continuation move to the downside if you close below that. And that's exactly what's happened inside the XAU. And that says the XAU wants to make a 100% move of a move because we had the 0.786 Gartley buy pattern hang out there for quite a period of time. That says that the XAU wants to get down into the 63.52-ish range. That's the low of October 24th, 2008. The high is 95.34. You're trading inside that right now. So it could be the lows before we actually see the buys inside the gold equities as a group out here. That is in the XAU. I did mention the currency pair. Yesterday we talked about the consolidation pattern. Let's go see if we can figure that out. It should be still on the screen. There it is. So let's take a look at it here. I'm going to blow this up. And, we were taking a look at this consolidation pattern. It lasted a bit longer. We didn't know what the time frame was, but here's the consolidation area that we were originally measuring. Now, if I could expand this out here, we can see that consolidation pattern lasted all the way until 1800, so that was 6 o'clock last evening out here, where it just continued to move sideways. Remember, the break of the consolidation said that you would do equal to or greater than the consolidation move. Now, if I take this up here, and we had identified where that move would be, and it said it would come right into the top of that rising price channel. Look at where the euro-yen currency pair moved to, right just a tad above the top of it. So that's how consolidation patterns work. You want to use those to your advantage. The interesting thing here is that this is a 30-minute chart, and what we have seen here, even with our markets pushing up so high, we have seen the euro-Japanese yen move to its lows to the bottom of that descending price channel. Folks, thanks for being here on Wednesday. Stay tuned. Basil Chapman will be up next. Larry Pesavento to follow after that. Daryl Martin, David White, and the Tom O'Brien Show from 4 to 6. Remember, folks, the way you do anything is the way you do everything, and become a pioneer of your future versus a prisoner of your past. Have a great Wednesday, folks, and look forward to seeing you in the morning.